90 miles an hour down the main line run. Big locomotive right on time. Big locomotive going down the line. Big locomotive number 99. Left engineer with a worried mind. Hello and good morning. Welcome back to the show. Wanted to come on and talk about the market a little bit before the open here. Thank you for joining me this morning. Let's take a look at major indices as I pause my self playing guitar for a second here, and we go to the market. Now, as I put in the teaser, I switched my positions all to cash a couple days ago, and I've been really freaked out, and I'm not quite sure why. And you know, it's one of those things where, like, even when you trade well, trading can be oftentimes frustrating. And I was pretty frustrated yesterday because, you know, I was sitting in cash and I kept looking for a point to re-enter a VIX short, and I ended up kind of not being aggressive and kind of quote unquote missing it. But now we're actually higher on the VIX than yesterday, so it turns out to be a good thing that I didn't put another short on. And, you know, ever since like 2 days ago, I've just been really freaked out about the market. And I'm like, why? I don't want to have my money in the market right now all of a sudden. But at the same time, when I'm all in cash, I feel like it's an opportunity that I'm wasting being in cash, which isn't necessarily true. You know, you need to have discipline. And you know, trading is so paradoxical in a way because we preach about not doing things based on feelings. We preach on having a method to the madness and being very organized and having sort of a system in place as to why you do things. For me, a lot of times I spend a lot of time watching time and sales, seeing what's trading as far as what's traded in the products that I focus on today, and watching all my indicators and whatnot. But I don't have a defined methodology a lot of times as to my entry and exit points. I don't use stop loss orders, for example, that sort of thing. But anyhow, let's take a look at where we are right now and talk about things a little bit more here as far as the market goes. Okay, so overnight, we were flirting with this 2,800 level in the E-minis up to the close, and then overnight we kind of rallied and then sold off a little bit. Let's take a look here. So what I ended up doing was I got out of my VXX position 2 or 3 sessions ago, and then I got rid of the rest of my position yesterday. So we were kind of just floating in this area up here right around 2,800. And if we go back to the close yesterday, you can see right in this area around 230 when the VIX was at its highest and VXX was around like 40, between 40.50 and 41. I was looking to buy this put spread. You know, I had a put spread on in VXX. I owned the 38.34 put spread, and I ended up selling the 38.34 put spread at $2.50. And then as volatility hiked up, it turned out that I could buy that. Now that's a $4 put spread, the 38.34 put spread. Well, it turned out I could actually roll it up 3 strikes. So instead of owning the 38.34, I could own the 41.37 put spread for the same price. So essentially, I could replace the position I had with one that's $3 higher for the same amount of price. And so I was, pretty much considering doing that, but I was not aggressive about it because I had this fear of putting money at risk, that I had this downside fear. And, like I said, I don't believe in trading in emotions really and that sort of thing, but when alarm bells go off in my head, I tend to listen to them. Because most of the time alarm bells aren't going off in my head. So alarm bells were going off in my head yesterday, and so I stuck in cash. Now, this might turn into all ado about nothing here with the market, but it just the fact that just it seemed like bad news keeps happening, and yet the market just keeps shaking it off all the time, and it just, in my mind, I just don't understand it. And when I don't understand the market, then I want to stay small. Not that I understand it perfectly at any time, but sometimes I get it kind of makes a little more sense to me than other times. And right now, it doesn't make a whole lot of sense to me. And the same thing with something like a Tesla, for example. Tesla, $800 stock. The economy shut up. The company is fighting with Californian government. The economy is having problems. We don't know what the future is, unclear. And this is a company that yes, they make actual cars and stuff, but the Tesla is it's like a popularity contest stock is what I call it. It's like a beauty contest, and Tesla's winning the beauty contest of stocks right now. And I got into trouble shorting Tesla last year, so I'm not going to go down that road again. However, it just feels like valuations of things are pretty high. Now, this isn't really my area of expertise, valuations of things. My area of expertise is managing options positions. So I try to stick to that as much as possible, but it has to have some underpinning of what I want to do trading-wise. And I felt more comfortable being on the sideline most recently. Now, it looks like we're kind of slightly off the worst of the low right now for a second. If we look back at the chart here, we can see we got down to 27.77, and we're 11 points off that low right now in the E-minis. We'll see where we go from here. But just the barrage of bad news just seems to keep coming and keep coming. Good morning, Tom. Welcome to the show. I was watching a really interesting Joe Rogan this morning with Michael Yo. I'd recommend watching it. Michael Yo is a guy who is one of the first guys to get the virus, and he was laid up in the hospital, and he almost died. He came through it, but he gave a lot of insight into kind of what it was like being in the hospital, and they did try that drug that the president was talking about, hydro, whatever, on him, and it didn't work in his case, but he just had a lot of insight into the whole situation. I really admire Joe Rogan because he's able to talk about politics and these sort of things without getting into the tribalism and the kind of the hyper partisanism stuff. And for me, I aspire to do that as well. I feel like personally, I lean liberal, but I'm surrounded, most of my friends are conservatives, and I'm surrounded by many people with different viewpoints. And, I pride myself in being able to connect with people regardless of our possible different viewpoints. Everyone's going to have different viewpoints. For a while, a couple years ago, I was playing a video game, and a bunch of the people playing the video game were actually Saudi nationals from Jeddah. And, we were able to talk about stuff, but we wouldn't talk about the issues that would be most conflicting, in the, relationship between, I don't know, Christian and Muslim and all that stuff. But we found common ground. And I think that something like this crisis could potentially bring the country together because we have sort of a common enemy for the moment. And but yeah, Joe Rogan's he has pretty reasonable views on stuff. Like, for example, they were talking about how it just doesn't make sense to too much participle. It just doesn't make sense to bring guns to the Capitol to a protest. It's like, why are you going to bring the AK-47s and stuff to a protest? And Joe Rogan was saying stuff that totally makes sense to me, which is like, the Second Amendment is there and is important to many, many people, but there's some dumb people out there that they don't think that much, and they bring these guns out here, and it's dangerous. Anyway, all of these signs, and I guess what really spooked me about the market was just that maybe the Fauci testimony, that this, I don't think it's dawned on everybody yet how long and drawn out the repercussions of this whole thing are. I understand certainly the side of opening up the country, and I understand what the president and administration wants to do with opening up the country. But the reality of it is even if we open everything up, people are not going to go out and participate, real actively in stuff unless they feel safe. People have made the point, which I think is an important one to make, that our economy has been open this whole time. Even though it's only, they say, well, essential businesses have been open. Well, that's a lot of stuff that's been open the whole time. I mean, stuff has been, you can turn the computer on, the internet works, you can get food. A lot of stuff has been open this whole time, but things are going to be different for a really long time. Certainly for me, my side gig, I work as a bartender at a fancy resort, and fancy resorts are not going to have a lot of business this summer. It's just the way it is. And I don't blame people. We're waiting on Massachusetts to reopen, and Governor Baker, who's our governor in Massachusetts, is having a big press conference next Monday, the 18th, where they're supposed to announce phases of reopening. And I don't anticipate the restaurant business to, it's probably another month until it all reopens. So, but anyway, my point is that it seems like the market is separate from the world in a number of ways. The repercussions of this, it doesn't seem have hit people seriously in the market. I guess what you have to think about, though, is what is the market really? It's mostly composed of rich people's money. And, I come in contact with a bunch of rich people all the time, and most of them are just leaving their money where it is and are like, well, this will pass, right? So when you think of what the stock market is actually composed of, then it makes a little bit more sense. People shouldn't see the stock market as being a reflection of the U.S. economy, I guess, is what it is. But when the U.S. economy just has all these super negative signs, it still makes me scared to be long the market, even though that's not necessarily what the market represents. I see people talking in the chat about real estate, and where I live is a resort area. And people rent out places for the summer, for the resort, for the tourists. And people either don't have renters, or they've got like one renter. They've rented 1 week out of 8 weeks or something like that. And that is painful. And when you have all of these different aspects of people missing out on making money, and people's like side gigs not working, all of these things have like chain reactions in the economy, and it doesn't seem like we've really figured it out. And I know that the people that, like the administration and stuff, they want to be optimistic, and they want to be they want to get people excited and get back to work and all that, this sort of thing. But we need to kind of be realistic about how things are going to go in the next few months. But once again, does how things go in the next few months really translate into the number of the Dow or the number of the SPX? It's really hard to say. In some sort of absolute terms, if something really, really bad happens, the market goes down. But the market can diverge from what's actually happening on the ground, and it does all the time. So it's a tricky game to figure it out. So someone said in the chat, but Trump says it's the best market, best economy. The administration, in a sense, it is their job to cheerlead for the market. And, that's what CNBC does all day. That's kind of why I turn off CNBC sometimes, because CNBC cheerleads for the market. And it's their kind of job. And I believe it's kind of sometimes it's kind of like the Federal Reserve Chairman's job to cheerlead for the market too. When I first started trading, the job of like an analyst, analysts that like rate stocks, like this one, you should buy this one. Well, for a really long time, when I first started trading in the 90s, analysts were they rated everything as good. They would they would push stocks, like their company would be like, oh, we need this one to go up, push this one, push that one. And analysts there was no analyst giving actually real information. It was all just hype. And then sometime in like around 2000, there was this kind of like change in the industry where analysts started being more like actually analyzing the companies more than being a cheerleader or than just rubber stamping stuff. And I remember that change occurring and there being sort of more honesty. I don't know. What I'm saying, I guess, is just it's not surprising that the administration is going to try to cheerlead. And, I think it's pretty much understood by people that the president wants to put things in the best light as possible to get reelected and wants the economy to do as well as possible before the election. And, that's a good thing to me, that the president's incentive is to have the economy do well, because that's a good thing that people are focused on the U.S. economy doing well. Now, obviously, there's a balancing act between health and the economy, but I think people, even the most ardent Trump supporters, when it comes to their personal life, want to protect their children, protect their family, and are going to not go out and participate in the economy until they feel safe and secure, with their kids, with themselves and whatnot. And we've seen that stuff reopening doesn't, you have those incidents of like people being in huge crowds in a bar or whatnot. But I think the majority of people are very cautious, and, it's going to be a slow, cautious reopening of stuff. And I don't see like things just popping back to normal, so to speak, right away. It's interesting. I don't know if you guys saw, there's this concert in Arkansas that's supposed to happen, and it's supposed to be like the first like rock and roll concert like since this whole thing has happened. And they there's a law in Arkansas that you can't have more than 50 people in a place at a time, and so they're wondering if they're going to cancel this concert or not. But it's interesting to watch. I think they're going to have this thing where there's like a bubble around. People bring their own like little bubble that they kind of sit in to protect themselves from other people. So let's see, this concert billed as first live show in pandemic, ordered by Arkansas to cease and desist. So they're not going to let it go through here, it looks like. But, as time goes by, some concert is going to go through. Let's see. Yeah, so they're not going to let that concert go through. Let's see. Tom, hold up. 5 factors. Yeah. Well, that's the other thing, is that people recognize that if they're more susceptible to this, that they need to protect themselves. And don't make the mistake of thinking that the public is not smart. The public is smart, and don't make the mistake to think that like our leaders are like really not smart, because it takes a lot to become to successfully run a campaign and become a leader of a country. So so people out there are not going to go and participate in this economy until they feel safe, and that's going to take some doing. I think they're going to have to get that tracing stuff in place more. Anyways, let's get back to the market here. So it looks like we're going to open down 26 here. The VIX is up and let's take a look at VIX Central, because we are back in backwardation, and the count starts again in backwardation. I believe it's like the third session now. Let's take a look at the chart here. We're not real steep on the curve, but we are back in backwardation. I suspect what I will do with my positions today is start to phase into a volatility short far out in time again, slowly. But it's been scary, and it feels like the market is just disconnected from reality right now. And like I said, markets are disconnected from reality for long periods of time sometimes, but I don't want to lose money. I know it sounds like such a simple thing, but I just don't want to lose money, and I'm hesitant to really jump in here because I'm frightened, and I don't often get that way. So I'm listening to my brain that says there's an alarm bell going off in there. I'm not quite sure why, but I'm listening to that, and that's why I'm kind of on cash right now. I don't know what you guys think. Let's see what we have in chat. Deliverance 2020. That's funny. I found myself once in Tennessee. I woke up at a campsite in Tennessee, and I was there alone. The people who I'd stayed with that night had left, and I was alone at a campsite in Tennessee in the middle of nowhere, and I had to hitchhike back into some town to get out of Tennessee. And it reminded me of Deliverance. Anyways, Tennessee, great place. Don't let me disparage Tennessee in any way. So we see, if I get out of the way here on the chart, that we are once again we are inverted and in backwardation. We can see that we're only 62 or 50 cents above the futures right now with the VIX, but from the VIX spot price to like the 3rd-month future is only 2.5 points. So we're not crazy out of whack here. We certainly could spike higher with the VIX. I think a level to really consider kind of laying into it if we do start to spike a little bit here would be like around the 45 level. A VIX of 37 is not real high. If we go back and look at a VIX chart here, we're only back to where we were like a week or two ago, right? Okay, so here's a 20-day VIX chart. Look, we are back to where we were on like the 5th, right? So it's not like something I don't think that you want to like super lay into, right? If we look at this kind of downtrend here, we're at the kind of the top of this kind of trough of the downtrend. Now, you guys know I'm not a huge technical analysis guy, but if you look here, yes, we've popped from where we were, but we're not at like some extreme level here. We're just kind of in mid-range for the VIX again, especially from what we've come from lately. Let's back this chart up a little bit more. Let's go to 180-day chart. If we look at it in that perspective, which I think is a good perspective to look at it, in a 180-day chart, we see that, a VIX popped up to here, doesn't even really break the downtrend very much. We certainly could pop back to 50 easily here. And the actual move in the market too we haven't gone down that much. So yeah, I'm spooked, but I don't have a ton of market evidence to really back myself up. Look, there's the E-mini chart. We haven't broken the uptrend here really. And then the VIX chart, we haven't really broken the downtrend. We've just had a pop here. So, until we've actually made a move, this is just kind of speculation here, right? We see gold rallying. The oil's kind of come back, which I don't think is unsurprising to most people. But if you look at oil, exactly what we talked about before in the videos, UCO here, it did get down to like 12, 11. Now it's back to 16 though. And that's with oil rallying from 6 to 26, right? UCO is only up like $4. So that just proves that it's a, buying UCO to capture an up move in oil or USO right now just doesn't really work. And we've talked about some of the reasons for that already, but I'm staying out of those products. We saw ACB did reverse split. I saw ACB all of a sudden was like $6, and I'm like, for a second I had that thing when something reverse splits and you didn't hear about it, and you're like, wow, it must have made a huge move, because it was 70 cents or something, but actually reverse split ACB and has been moving lower since then. I think it's down 15% since the reverse split. But gold, 1724, it hasn't gotten back to the highs it made a few years ago yet. I think that would be important. Let's see. So the high, I can't go back far enough to get there, I guess. Gold hasn't gotten, the high I think was like 1900 and something. It hasn't gotten back there yet, but it's certainly been rallying. And, that makes a lot of sense to me, just because the dollar is being devalued, because we're putting more dollars into circulation, and it's devaluing the dollar, which means it costs more dollars to buy an ounce of gold. So that just kind of makes sense for me. It's a lower high on the VIX. Yeah. Really, the moves in the market have not been that big. We haven't seen, it was down like 1 point something percent yesterday. We just haven't seen the market moving around like it was initially. We're still in a downtrend in the VIX, but I got spooked for a little bit. And let me just put it this way. The fact that I got spooked has worked out so far because I've avoided losing money. But it probably makes sense for my particular position for me to just reestablish, if I can have the same position on, but I've rolled my strike up 3 strikes, then that's, you can look at that positive, really, any way you look at it. Sometimes I think about like scalping a stock positively or something as like, when you're on the highway, there's the fast lane and the slow lane. When you're in like kind of busy traffic, if there's 2 lanes that are kind of like neck and neck, one's moving ahead, one slowly, and they're kind of like competing with each other. Sometimes if you let's say you get in the fast lane, you're in the right, let's just say you're in the right side lane, and you go over to the left lane, and the left lane starts moving ahead a whole lot, right? And so you moved up many cars compared with the right lane. Well, the feeling is once you've moved up so many cars compared with the right lane, you might want to cruise back into the right lane again, because then you've you've made a lot of ground on all the other cars if you just move right back into that right lane again once you've moved way up. It's the same thing with like this VIX short. I had the VIX short on, I took it off. Now the VIX went way higher. If I put it back on now, I've kind of like at higher strikes but the same prices, I've kind of like locked in that edge. So when it goes back down again, I'll be in good shape. And that's kind of what I'm thinking about right now. But at the same point, I'm being very careful. But if you can, a lot of trading options is just kind of like locking in some kind of edge versus where you were before. So kind of making deals with yourself. So for example, for me, I was long the 38-34 put spread. I had 36 of them. I paid $2.54 each one. So now I can go in, and instead of buying the 38-34 put spread, I can go and buy like the 42-38 put spread for the same prices. And then I've kind of ratcheted everything up, but I basically essentially by getting out of my position, I've moved from the slow lane into the fast lane. I've moved way ahead compared with all the other cars in the slow lane. So now it's like move back into that slow lane to lock it in, sort of, is what my idea is with the position. I don't know if that makes sense or not. Anyways, here comes the open. I'm going to let you guys go onto the open here, and we'll see what happens as we start the day down. Best of luck to you, and let me know how you're doing, and stay safe, everybody. Thanks for watching. See ya.